to jump in and talk about the new Bitcoin ETF, right? And so I wanted to kind of look at that with everyone if you're interested in playing this. The new Bitcoin ETF that is futures based is the symbol is BITO. It is barely been trading just for a few days, but they already have options on it, which is very, very fast. Usually it takes about a week before they have options, but they have options on it. So I wanted to actually trade that today. But you probably heard some stuff in the news about that it has some type of drag because it's futures based. This is based on buying this futures contract here. So the futures is regulated by a different regulators. The Commodity Futures Trading Commission regulates the futures market. The SEC regulates the stock market. So Bitcoin or cryptocurrencies is not considered a security yet. But once it does, then it's going to be regulated differently. But since it's technically a security, but a futures type of security. So it's once again regulated by a different regulator. So the only way they can come out with an ETF in the US, it had to be futures based, meaning that they're not actually buying cryptocurrencies. They're not going on to something like Coinbase or whatever the case may be and buying the actual Bitcoin, or if they come out with another one, Ethereum, they are buying and selling the futures contract. This is the Bitcoin futures contract here, right? They have a micro one, and then they have this big one here. They most likely are trading only this big one here. And when it's going to have some type of drag, because the futures contract, it has what is called a cost to carry. It's not huge, but it's not going to be exact as Bitcoin. So if Bitcoin is up 10% for the year, let's say, for example, that doesn't mean this ETF is going to be up 10%. It will be up, but not necessarily 10%. So it works similar to how this USO ETF works. This USO uses the futures contract of oil. This is the futures contract here. You can see that oil future contract has been going up over the last several months, right? And if we kind of look at the USO futures ETF contract, you can see that's also been going up over the last few months. So it's going to go up. It's just not going to go up or go down the same percentage wise. Okay? But I think it's still a good thing to use. You can speculate on this Bitcoin ETF, and you can use it as a hedge to hedge things like Coin or Riot or Marathon, all those different types of cryptocurrency stocks out there. You can now use this Bitcoin ETF to hedge that, or you can use it to speculate on different positions. So I was looking at it, it's down today, it's down what, 5% today, right? So, and this is normal. You want this stuff to go down. You can see that Bitcoin has been going up so much, right? And Ethereum, we finally have a down day. It hit an all-time high yesterday for Bitcoin, so we want it to go down. But let's just say you think this is transitory, it's temporary, right? So you want to play it with, you got this 5% down day, and you want to play it in this new ETF Bitcoin because they have options on it, right? Instead of just outright buying Bitcoin, which you can do on Tastyworks, you can do through Coinbase, you can do through PayPal, things like that. You can actually buy Bitcoin, but that's just a binary type of transaction, meaning it's a 50-50 shot, at least initially. Maybe Bitcoin is going to be up higher a year from now. No one knows, right? But initially, you have a 50-50 shot, a coin flipping chance if it's going to go up or go down. But if you use options, then you can have a higher probability of, even if it goes down against you, let's say if we're going to be bullish, we can still win even though it goes down. So you can see that you can buy crypto off the Tastyworks platform. This right here is Ethereum, this is Bitcoin, this is Litecoin, and they have other coins on here as well. All right, so jumping back over to this table, and we're going to look at two expiration periods. And we're going to look at 29 days, and we're going to be bullish on this. So we're going to do a put spread. So normally we trade between the 5 and the 15 delta. We're going to look at the 18 delta here, and we're going to do a 3-point wide spread. So this is the 34 strike. It's currently trading at basically 41. It actually was in the 40s, kind of jumped up a little bit. So we might not get the same price that we want. I was trading at 57 or something like that. So if I do 2 contracts here, you can see if I do this, I'm going to get at least 110 over 490 in buying power. So way more than the 12% that we want. So I kind of like this trade. And the great thing about this, we go in this curve view here, you'll be able to see, I'm going to make this a little smaller so everyone can see. This is the at the money line here. This is where it's currently trading. If it goes up, and this is in this direction, we're going to win 100% of the time. This is our win zone. But we also have a win zone if it goes down. As long as it doesn't go down too much, we don't want it to go past this short strike here. But if it does, we have a stop loss with this long strike here, this long leg here. And the most we can lose is 490. That's what the regulatory bodies are requiring us to hold in your brokerage firm. The 490, that's your max loss on these spreads and regular T margin. All right, so if you have portfolio margin, it's going to be less than this, but this is the trade for 29 days. I like this one. We're going to look into doing it in just a second, or we can look at the 36 days, just 7 days a week later, but it's you can go to, instead of the 34 strike, you can probably go to 33 strike, still do 3 points wide and do 2 contracts. And then this is going to give you the 114 over 486. So a little bit more than what the other one was showing. And it's the delta is a little smaller. So you give a little bit more room. So right here you have an 8-point difference if it goes down. Okay, so it's somewhat semantics, figuring out which one you want to do, 29 or 36. Let's look at the 29 first. Okay, I normally would go with the higher expiration, but let's look at this 29 first, and we're going to go with this 34 delta with 3 points wide, and let's see if we can get the 56. Put it in a little bit more, and we're going to send this, and we're going to get 107 over 492. That's going to be more than 12%. That is, you kind of do the math on that really quickly, everyone. That is 107. I'm not worried about the cents, divided by 492. And so that's 21.7%. We're going to send that, and we're going to see if we get filled. I doubt it. The spreads are somewhat tight for these options being fairly new. So they're not going to fill us at that. Let's look to see let's kind of play the game. And I don't want to get filled on both of these, but let's play the game of seeing which one gets filled first. So we're going to send this one now, do 2 contracts, and we're going to keep that at 57. That's the mid. We're going to get a little bit more on this, and we're going to let it play for a quick second here, and then we're going to drop it. So I'm going to drop this to 55 and see if we can get filled at the mid. So I got a little glitch going on with my Tastyworks platform right now, but I'm going to send this, and no love on that by dropping that a little below, at the mid. So we're giving it another second here, everyone. I'm going to hit replace, and I can still get a decent amount with that 29 days. I'm going to see if they'll fill me at 54. So that's still 103 over 496, and no love there. And give it a quick second, and I want this to continue, so I'm probably going to skip one, then go to the make sure I get filled on one of these. All right, so it's not going to happen. I'm going to give it to me, maybe make me do it 5 points. So I'm going to cancel this one to 36 days, and then I'm just going to drop it one more time. We'll see. I'm not going to drop it 50 more. We were at 55, I believe. Just double check. Nope, I'm already at 54, so I'm going to want to do that. I'm going to go to 53. That's going to be 101. All right, so then we got filled. All right, so we got filled on that. I'm not going to hedge this. I'm just going to, this is complete speculation play for 29 days. But as you know, if you're going to do this trade, this is not a yellow highlighted trade. This is a speculative trade, and that we're going to try to get out of after 50% after fees and commissions. And we're going to try to do that within the next 16 days or so. Hopefully that'll play out. We'll see how it plays out. But wanted to kind of introduce you to the Bitcoin ETF, how it works. The options are already available, and it does have a little drag because options, because it's based on the futures contract. Once again, this is the Bitcoin futures contract, and you can see when I'm bringing up over here that the Bitcoin futures contract has expiration, different futures contracts based on expiration. So you have this 8-day one that's going to expire in 8 days, and you have 36, 71, 99, 127 days. So once this 8-day one expires, the people who operate the ETF or manage the Bitcoin ETF, they're going to have to start buying this 36 one, and they could be already doing that and already buying 71, already buying 99, a few of those. That's how they would do it. And it's going to sometime be a cost to carry. So the futures contract that's further out might be more expensive than the front one. So for example, this one right here is trading at the last price is trading at 63,000, a little over 63,000. The 36-day one is trading at over 64,000. The December 21st contract is trading at 65,000, as you can see here. And then way in February of 2022 is trading at 66,000. So it's more expensive in the back month, and that's what it's called, contango. It's some terms that they use. Contango means the front month is cheaper than the back month. That's a normal market. And then you have what is called backwardation. Backwardation means when the front month is more expensive than the back month or later dates. Okay. All right, so let's open it up for any questions. We got about 6 minutes, everyone. Unfortunately, I do have a hard stop at 1:30. Any questions regarding this Bitcoin ETF? Any questions regarding anything else?
Yeah, O'Brien, I have a quick question. What's your profit potential on that trade that you just took?
So the most we can make on that trade is before fees and commissions. The most we can make, you can see the trade right here, is 106.
106.
$106. That's the most we can make if we go to expiration, but we're not going to do that. We're just going to try to get 50% after fees and commissions. That's what we're going to do. But it's the reason why that trade, good question, but I want to make sure you understand it's not a huge amount you can make, but that's just the game that we play with selling options. But it's better than, you're going to have a better than a 50-50 shot, right? So you have an 18 delta. So at expiration, at this 29th day, you have an 82% chance of winning on this trade. Okay?
I see.
Expiration. So it's not it can go against you, as we were showing with the, if we do this again, as we were showing here, 2 contracts, it can go against you and you can still win based on this curve view here. So this is the at the money line, as you can see here. If it goes up, like I was saying, you're going to win 100% of the time. But you can also win. This is the beauty of just not buying Bitcoin outright. It's fun to buy Bitcoin outright. You want to do it for long term or whatever the case may be, but it's binary. You're gonna lose if it goes down, right? Because you can only buy it because it's not a security yet. You can only buy it and sell what you own. You can't go short it. But with options and using this Bitcoin ETF, you can do all of those things. You can short it. You can go long it. You can use options the way we're doing here, and if it goes down, you can still win. As you can see, this is a big win zone here.
Okay.
All right, awesome. So any other questions everybody? We got about 2 minutes. I apologize again that this just seems to be fast, but
I have two quick ones. One, there's another ETF coming out. They were expecting it today. Maybe it's going to be tomorrow. It's the symbol BTFD. It's by Valkyrie. So keep an eye out for that ETF on Bitcoin.
Okay, so it's gonna be the same thing basically, right? So
basically the same thing. Yeah. Second thing that has come out is that Grayscale is now just put in the paperwork to have a spot ETF on their Bitcoin and their Ethereum trust accounts that they currently sell. Okay.
Okay. So that's going to be an option for people to trade as well.
Right. Okay. It's not out yet, but they put in the paperwork to get approval. And the last thing, because of the halving and all, the Bitcoin is expected to have a nice increase up till December, January timeframe. And then because of the way Bitcoin works, there could very possibly be a roll down. And so don't hold any of this for a long period of time. Don't do a long-term type of contract that Ernie would do. These are still short-term plays.
Okay, all right. I agree with you on that. Let's see here. I'm just going to see what this looks like really quickly. That's a debit like this. 57 days. I did a kind of a Bionic bull. You can see that right now, because this is new, this ETF is new and so forth, they're requiring your max loss as buying power. So I wouldn't do this Bionic bull unless you were in an ETF, in an IRA, and you're okay with taking ownership of this ETF at a cost basis of $38.75. All right, so unfortunately, everyone, I do have to run. I do